The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your soft but cuddly and squeezably soft host. Another day, and we're getting at least a little bit of action, a little up and a little down. And gold, I see, is selling off a little, or was selling off a little. Is it? It's off $8 now. It had a roller coaster ride earlier today. We'll tell you the reason for that and why it's now down about $6 since the Fed minutes came out. We'll get to those in a few minutes also. But right now, let's take a look at the S&P cash out here. And we're trading out off 50 cents at 2051.22. We were as low as 11 points lower than this earlier in the day. 2.1 billion shares, which is starting to be kind of average at this time. Not a whole lot more, not a whole lot less. Of course, a lot of that came in the last 7 minutes after the Fed meeting notes came out. Not a lot to get into it other than they were very concerned about deflation and actually thinking that inflation is going to be dramatically under 2% for the coming year, and they felt that that was problematic. For those new to the show or haven't been spending a lot of time looking at the macro idea, the Fed's scheme was to inflate the stock market and over the next 5-10 years let the actual fundamentals catch up with the market over time. And the prerequisite for this actually working was having some decent inflation numbers. Same thing with the housing market, the same thing, the other things. We're just going to inflate them, and that way everybody's not going to feel a lot of instant pain. We're just going to drag that pain out over a number of years, and therefore people will think that we're back in the Jimmy Carter malaise. But that's better than a lot of people screaming for a couple of years and throwing everybody out of office because, of course, the most important thing is not the United States, but keeping your seat in the House or the Senate or as president. The job of politicians is to get reelected from the second that they win their election till the second that they win the next election. And that comes with cash and a variety of other things. So we should not be probably too discouraged from what we believe to be true about politicians. But it is an interesting day out here. Again, seeing a little bit of movement in gold. And that, I think, pretty much on the inflation part of the Fed minutes out there, just looking at it. Is it going to have a permanent effect? I don't think so. A little bit of a wet blanket, kind of. But we'll get into the other big move in the gold market today in just a few minutes. On this day in 1970, the first real public company came out in the United States offering a share at $10 per. More than 660 investors from all walks of life signed up for the shares. If you'd spent $1,000 to buy 100 shares on the first day, they would have been more than $10 million in 1998 of the insurance company. The Insurance Company of North America. I think they got bought out by somebody and then went bankrupt, but I can't remember now. But anyway, a company that has been public for just about ever. Well, even then, sometimes you can make some cash. But there's always the day you have to sell it. And it doesn't matter how good a company is, things can change. If you really wanted to talk about things changing, the iron ore business is pretty horrifically bad. CLF is taking a beating like a baby seal out on the ice. It's looking at exit options for its Eastern Canada iron ore operations, including possibly closing its Bloom Lake mine. And my guess is that possibly closing really means how fast can we close it and how much is it going to cost us. Not only are they closing it, but it's probably going to cost them $600-700 million by the time they get it done. And Mr. Market doesn't like that at all. Now, one of the reasons they're doing it is environmental concerns in Eastern Canada, that probably cutting off your nose to spite your face for business in Canada. But it is what it is. You can't say anything else. But they are seeing some problems. Of course, it was way down on volume today. And if you look at this as a bigger ABC from 1841, which was the last major high, to $7, which was the last major low, and the reaction to that got to 1170 around the 1st of November. That sets them at ABC to 0, actually 29 cents. And can it get there? The answer, I think, is yes. And the reason I bring this up is because we see a lot of people thinking that coal is going to come back. I don't think that we're going to see any movement in coal. It's more of a political issue. Of course, the president vowed to bankrupt all the coal companies. He's well on his way there. One of the things that has happened over the last year, I don't think a lot of people spend a lot of time with, is him putting in very specific people in the EPA. By him, I mean the president. And it's not going to be bullish for any of these companies and any miners. And you're going to have to probably, unless there's some dynamite, you're not going to blow these guys out of their hutches over there at the EPA. And I would say that any of these companies left probably in the next administration, if it changes parties, there may be some hope for these things. But I would be very, very worried about any kind of mining company in both the United States and Canada over the next 2 years. It just looks like the sworn enemies of the current administration first was coal and secondarily mining. And I guess the reason they really, when I dug into this morning, that they're really getting rid of this is a lot of protectionism. And it looked like the transportation costs that were going to be rather minimal. By the time the government got done, the equivalent of the EPA in Canada got done with them, it went to $50 million over 6 years to like $400 million over 6 years for just transporting the iron ore out of that area, and pretty much put the kibosh on this thing. So there's always a political element, and winners and losers when it comes to politics. And I'm going to say that at least as we look north, those transportation costs were raised to make it prohibitive for Cliff Naturals to actually yeah. So anyway, it is what it is. I don't know if you can do much about it other than make sure that it would be very tough for me to say you want to be jumping on that grenade, which is coal or any other natural resources that involve mining in the near future. Some of the other interesting things going on out here. We saw the DreamWorks animation basically deal kind of blow up. This is the second one that's blown up in so many months. Since I was in this business fairly well, at least on the hardware side, not on the creative side. I guess I was in the creative side of making new hardware. Of course, the company I was with kind of made the equivalent of the laser printer for animations and animators. So we were kind of on the back end of them getting it out of the computer and onto videotape or into the movies. And I got to work on a variety of movies out there, meet a great deal of people. Interestingly enough, I would be looking at Disney kind of closely. And one of the reasons is that because this thing blew up, some of the people decided to leak some of the documents out of this agreement. And basically what happened was Disney wrote them a really nasty letter back to the Hasbro CEO saying it would make us pretty much adversaries. And what does that mean? They've got a great deal of their business already at Hasbro that has to do with Disney. Of course, they want their own arm to create their own products. Not a bad deal, except one thing. And if he wrote, indeed, the CEO of Disney wrote a really nasty, scathing letter threatening the people at Hasbro, it's pretty much a huge no-no. And you might see Disney get their hands slapped by the Justice Department when they get in there to antitrust and anti-competitiveness. Depending on how the way the letter was worded, can come back to haunt these guys a great deal. And, of course, it's not just the letter. It's once the Justice Department gets in there and starts looking at all the internal emails where these companies basically say that we're going to cut them off at the legs if they do that, that looks somewhat problematic. But it does look like Disney was the reason why this deal blew up and why it blew up twice. As I said, a third of Hasbro's business is with Disney, and there is one saying that now that I'm out of that business, and I'll let you insert the word that I cannot say, but you don't screw with the mouse is always the saying in anywhere in broadcast television, movies, or anything else, probably in Orlando. No bigger than in Orlando. They have power and they use it to the absolute extent that they can. We sold to one company that had a huge or a long history of making these very big catalogs. And one picture, about a quarter of an inch in one of the different things that they were showing in the offices of this company that distributed broadcast television products to all over the country. Literally, something smaller, a quarter the size of a stamp, had little Mickey Mouse ears in it. For some reason, someone was doing something when they took a picture of them at a production board. And it may have even been in Disney's offices. But they made them recall all 50,000 of those catalogs that they sent all over the world, and were willing to bankrupt this company if they didn't bring it back. They are highly protective of their turf, and one day I'm pretty sure that we're going to see some big cash outlays by Disney, because they're always right on that line, and when you are, it doesn't take but a little bump to get over it one day. All that glitters is gold. Of course, we saw a huge move down from about $12.95 to $12.75. It happened within a microsecond of an article from Reuters showing that the Swiss voters had a proposal, or their proposal, had a poll out, and that poll showed that the support had slipped to 38%. It's unclear whether this poll was even real, or maybe someone just planted it out there. We'll get to the press in a minute when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, anyway, we're talking about this article that came through Reuters, and I dug into it a little bit more. It's not uncommon to make news with polls anymore. And for all I know, in fact, there's a big deal about it today with one of the, is it Uber or Lyft, talking about phony reporters basically coming after them. We'll get into that if we get time. But it was, I think, this thing happened so quick and came back. The question is whether or not someone either wanted to cover some shorts or wanted to get long in gold today. And we'll watch how gold actually works out. But that was kind of the issue out here is whether or not the Swiss voters referendum was right or not. We're not the only country where the press has a axe to grind, and they're more than willing to ask a question in a very specific way to get the result that they want. And then when it gets very close to the election, they actually ask a question that will probably come closer to seeing the result of that election. We saw that fairly largely in the last election cycle. If there would have been, if it would have reinforced their beliefs, they would have had a poll every day, would have quoted the poll every day in case of it being in their favor. Everybody has an axe to grind, as we've said before. And the question is, now, or when I looked at this, my first question was, in the move out there, so many computers now just read the headlines that all you have to do is get something in, and you can certainly see a big movement like this at any time with the high-frequency traders because, of course, a computer reads the headline and doesn't actually get into any depth. But if you believe this, it is a poll in Switzerland. Who knows how well it was done, what question was asked. For all you know, would you support the Swiss voter gold referendum if you had to beat your wife? Well, maybe the answer is that 38. So you always have to get more deep into this. But if you wanted to, let's say that you published your own poll, you spent $2,500 to do it, and then you started sending out things and waited for the Reuters guys to bring it up and not check it out. You could have had a nice 20-point move in just a few minutes in gold. And you always have to watch about that now because, again, there's no human out here saying whether or not this poll was any good. The reaction would tell me that maybe you'd want to question this poll. But I imagine we've got, about another week or so to go. I imagine we're probably going to see more polls that we might be able to hang our hat on in the near future. But be wary of polls in the Swiss area. Like I said, it was impossible to find out anything about what this poll was and who did it. But we are not the only country in which either the press or unscrupulous individuals try to shape policy by putting out bogus or misleading polls. Tesla was out today and down a bit. Do I have it up here? Do I have it on my list? TSLA. I did not. It's still off about $10. I had somebody question in the den about why Netflix, why Tesla is weak. Basically the same reason for both. There was a big deal going on over in London, and Jim Chanos was out there. Basically, there were a bunch of people pimping Tesla. And he said basically this live on stage, which I think was about 7 or 8 o'clock our time. He said, the company is a testament to our ability to trust 10-year forecasts in people who can't get one-year forecasts right. He's talking about Tesla. According to the Twitter feed of Bloomberg Media, Dennis O'Brien, who was there, no relationship to Tom that we know of. I asked his son. And he says there's a lot of O'Briens out there in the woodpile, but he doesn't know if this guy has anything to do with them. Let me, I've somehow hidden my IMs. Let me get those back up. There they are. Okay, what else do we have out here? Oh, we got... Okay. Oh, Andy's IM'd me here so I can look at it. It says, was a Daily Mail poll. So maybe you can think a little bit more about that. About 38% of the polls, I already read that part, must be more secure, more than 50% pass, according to the Daily Mail. Well, who knows? A lot of tabloids over there in England, though, so who knows? Again, I think the market thought that was a little problematic. But the inflation, not so much. Still off 8 points on gold. Be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
All right,
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we come back, had a couple of questions in the den, and you, of course, can always call me at 877-927-6648. Boy, that was so slow. I think I was about 15 when we got actual touch tones. Well, we had rotary dial. Boy, what Stone Age. I grew up in the Stone Ages. Anyway, when we look at, I had a couple of questions in the about some stocks, so we'll look at those real quick. Of course, Lowe's came out, especially after yesterday's move in Home Depot. Lowe's was kind of a lot of shorts had piled on it, thinking the same thing would happen. Of course, a huge pop in it today. The question is whether or not there's some kind of exhaustion move. I don't think the numbers were as good as the pop. I had a feeling that a lot of it had to do with people getting short. Especially this is getting toward the end of the year, and a lot of funds are really working extremely hard to play catch-up. And part of that is these hedge funds piling on stocks like Lowe's a day or two before on news, thinking that they know which way it's going. Normally, forcing a trade is fairly a bad idea. But I was watching this thing trade yesterday, and it certainly looked like a lot of shorts were piling on it, only to get squoze out today. Again, I don't see anything different happening in this market in the near future. I wrote in my newsletter that I suspect that we have about 2.5%, or let me put it this way. Option market makers believe that we have about 2.5% up from here till the end of the year. Actually, till the expiration in December, which I think is pretty much the end of the year. So that probably by the 15th of the month, my guess is that we're going to see volatility fall to ridiculously low levels, and we might even see a VIX below 10 late in that area. You look at the options for this expiration on Friday, and there just isn't a whole lot going on out there. I found one play for the daily newsletter, and it's got about a 4 or 5 to 1 possibility, but like all these kind of last-minute trades, they're probably, a 50-50 chance, but at 5 to 1, I will continue playing them. But we'll see how they do the rest of the day. Let's see what else we have going on out here. We got a lot of churn going on in a lot of the stocks, and it's not uncommon before we start seeing fairly decent moves in the market to see what's going on. But I think we're building energy to probably have a nice little pop. That pop will probably come right after the numbers for retail sales in about 7 or 8 days. In the meantime, we are slowly burning off energy on this upper side. And what are we off? 5-6 points on the S&P cash now. So just a lot of churn out here. I don't think there's any real direction coming. And for the most part, I suspect that we're probably going to see a rather flat expiration over the next 2 days for at least this expiration cycle. Don't see a great deal of anything out here moving anytime soon. Probably going to have some pops and some individual stocks over the next 2 days, but that's about it. And like I said, I'm kind of looking at that for a couple of plays. Actually, just one is a pop for Friday. But there is not a great deal out here that you can hang your hat on. It's all about news-driven stocks. And when we look at Lowe's, it's just like the rest of them. Let's take a quick look at HD. But the question on Lowe's was whether or not that was an exhaustion move. I think with this market, I think you can almost say it's an exhaustion move. Does not mean that this thing is not coming back, and I don't think that you can look for it to pull back in the next 3 or 4 days. I think it's going to go sideways. Interestingly enough, Home Depot, of course, another kind of move down here out here. It seems like Home Depot and Lowe's, one quarter to the next, one comes up with a better idea how to run a promotion or get additional sales, and the next one duplicates it the next month, and of course they pull back. It's always 6 and 1 and a half a dozen of the others of these companies. But to me, if you're looking at Lowe's, I think you sell it right here and think about maybe buying it after the first of the year if you are bullish. Just don't see a whole lot left in these stocks between now and the end of the year. If Home Depot may have been a little stronger, I might have been posed to keep it, but I just don't see a whole lot in there for those. Low volume is high. To me, it's just a short squeeze. You're going to get 3 days of a short squeeze on Lowe's, and like a lot of these things, it's just not going to matter that much. But just watch some volume out here. The problem, like I said, is far too many people trying to make something happen out here, and almost always that's to the short side, because trying to squeeze and move stocks much higher other than a short squeeze is always problematic. Like I said, at least option market makers over the market are thinking that we've got 2.5% higher in the S&P before the end of the year. To me, that just isn't enough to go long here. You need to find an individual stock that's probably going to have a lot of short interest, that's going to be squeezed. You're probably going to have about a day and a half to get out of that short when they do squeeze it, and probably it'll come right back to where it was before. But if you can find the right stock, pretty low, pretty good risk reward, i.e. I don't think they're pulling back. The worst thing is probably going to happen is they don't go higher. And I'm in a bunch of those stocks right now, and as soon as one of them pops, I'll be playing whack-a-mole about pulling the trigger and getting out of those and giving our shares to those inclement shorts that are going to get squeezed out, I suspect, before the end of the year. That does not mean that I think next year is going to be a bed of roses. But at the moment, I just don't see anything that's going to move these people out except horrible numbers after that, and or riots and looting and real wrath of God stuff, dogs living with cats, maybe on Friday on a combination of political events going on in the country. But other than that, and even then, I think the market's just going to ignore it. I think everybody's got into the idea that they're just going to paint this tape all the way to the end of the year. And without the Fed really coming out with something today that changed that on it, going to be that. Okay, what else do we have going on out here? I think that's it. Again, give me a call at 877-927-6648. You can email me at path@tfnn.com if you'd like me to look at your stock, or you can call me, either one. But kind of watching a few out here, just kind of treading water. Doing a lot of work on the Jesse Livermore book and the Jesse Livermore Remnants of a Stock Operator audio book. That I'm recording, and about halfway through the recording part of it, as I go through it, I'm making notes and really starting to look at what we have here as the 1906-1907 highs in the market. It was very close to just about everything. A lot of very low interest rates, a lot of banks lending money on just about anything because they believe that that there's almost no risk. In this case, the Fed back then, they just it was blue skies were the limit. But we'll see. But right now, I'm looking in the tape, and I want to see some stocks, most notably the very large stocks, see some weakness with volume that says someone's selling, and I just don't see it. Let's take a quick look at Tesla, TSLA. And, of course, this is off. You can make a case for this on an ABC down. Of course, Jim Chanos, one of the biggest guys on Wall Street for spotting fraud, and he basically dissed Tesla and Netflix today, and I think that's pretty much why we see weakness in both of these companies. He's a real guy to just sit there and churn over the books and find out where the dead bodies are buried. Any independent assessment of where Tesla is and their future earnings once they get this battery plant up and running would suggest that this is more like about a $40 stock. Yes, can you make, at the very beginning of it, make some fairly high margins? Being able to actually carry those margins is problematic. I also see that the Japanese companies are going whole hog after the fuel cell business. I would say that that's very problematic. Two of the biggest problems with basically electric cars are batteries, replacing those batteries every 5 years at an enormous cost. Even if Tesla gets and was able to cut 10 grand out of the cost of a Tesla with lower batteries, it would still be relatively expensive. Fuel cells, a little bit more money for the actual fuel, about 25% more expensive than actually using the electricity that came out of your wall to begin with. But only about 3 to 5 minutes to charge. And I have a feeling that maybe the Japanese think that that's more of an issue than sitting around at a rest stop for an hour or two waiting for your batteries to charge. Also, replacing a $20,000 or $30,000 battery pack in a car every 5 years may make a car almost worthless. And I'll look at maybe buying a Tesla with a bad battery pack and seeing if I couldn't convert it to a fuel cell technology, or if ultra capacitors come out, changing it to an ultra capacitor car. I think there's going to be some very nice ability to go back and hack those cars built on what is pretty much fairly raw technology yet. Certainly dollars and cents, very tough to justify, other than the consumer with a lot of cash. Because you could buy a fairly decent car that gets 40 miles to the gallon and own the car probably for the next 10 years at about a fourth of the cost of the Tesla. You can buy a nice BMW or something that gets fairly decent, good gas mileage with a diesel in it if you are really interested in saving some bucks. Electric cars are the future, but problematic. Netflix, kind of the same thing. Let's take a quick look at that NFLX. Other than Netflix had its huge gap down, having a little bit of risk out here. A lot of people kind of nervous out here. My guess is that this thing still, over the coming months, we're probably going to see some press releases over the next 35, 45 days. I suspect that we're going to see this thing back in that 420 range. That's where I would like to pull the trigger. If this thing can get 420, 425 around in Christmas time, first of the year, I would love to see this thing where I could pull the trigger on it. But I would love for it to fill at least part of that gap. It may run without me to the downside, but the risk reward would be absolutely brilliant at 420. 425 on that, and it's not beyond the scope of reason to see them come out with a lot of press releases. Of course, the biggest problem that Netflix has is it's expanding, and they have to put a lot of infrastructure into it, and right now they are rolling out in New Zealand and I think in Australia and some of those other Pacific Rim area countries, and that is going to put a little bit of burden on them. So it's going to be hard to see how it gets to 420, but I would certainly love to see it. I don't see the risk reward out here other than a test of 331. I would love to see a nice huge push up and the shorts get squeezed out of that and then get into Netflix. We have a lot of stocks moving out here. Again, you can call me at 877-927-6648. I thought law of volume at the highs is bearish. Am I wrong? You're in the Christmas season. There's a giant magnet sucking these stocks higher, and I don't see that changing anytime soon. Let's take a look at the off 7 points on the S&P cash now. 2.4 billion shares at 2044 on the S&P cash. We're off 30 points on the NASDAQ, which is mostly or was earlier with Apple. Apple's off about 68 cents. Let's take a quick look at that. Looks to me like they are really pushing Apple up into the end of the year, and you're probably going to see a nice break of this right after the first of the year. Could you lose $10 on this in a day or two? I think next year, I think the answer is yes. This really has all the hallmarks of a bunch of people all equally guilty of painting the tape on Apple, and I'd be watching this the first part of the year. I think you're safe now. Maybe you get a little bit of pullbacks on it. In fact, I'm going to look at the options on this during the break and be back with you. Give me a ring, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFCom and get your 2-week Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, I don't see a lot going on out here. Maybe we'll have a quiet expiration. I suspect we will, unless we get some kind of real fireworks out of the political issues that will look like they're going to fall tomorrow and Friday. But it is, I'm expecting a little bit of a bounce. I would not be surprised to see the S&P close out at 2060 on Friday's close. That would probably be about enough of a bounce to get it. It certainly looks like option market makers are going to be pushing stocks up just a little for the most part. Much clearer idea of what option market makers think on December 20th, or actually December 19th, on that expiration day. They are all pretty much in harmony of looking at 2.5% higher on the S&P cash. And it's kind of hard to say that that will not happen with everything happening. Just crossing the wires now is a very interesting article about Apple. It looks like they are going to be pushing their streaming service and not giving you an opportunity to opt out. If you have an iPhone or if you have a Macintosh computer, they're going to force download the whatever they're going to call the Beats audio streaming service to your phone right after the first of the new year. And a lot of these companies tend to be dancing all over antitrust laws. Of course, we haven't had a Justice Department that's really gone after these. But coming on the heels of them shooting out that horrible U2 album, not all their albums are bad, U2 I mean, but a lot of kickback. The question is what people are going to think about that. The real reason I bring this up is if you have an older iPhone, you may not have enough room when this thing forces out all your stuff, and they may just delete some things for you. That's what a lot of people complained about on the U2 album. Wasn't that just they got it force-fed to them. One, they couldn't delete it, and two, it made room by getting rid of stuff that they wanted on their older iPhones that didn't have quite as much memory. And the question is how that Apple will handle that. But I don't think anything's going to happen right away. But I'm looking at a lot of these companies, not just Apple, doing a lot of things. And, of course, Microsoft severely got their hands slapped over a number of years for basically forcing new downloads of Internet Explorer and some other things. And, you know, especially with Europe, some of these other countries looking like they're going to have a hard time, they are more than happy to go after the big cash in big pockets. Apple could be one of those, and I would watch out if I were them. And like I said, with Disney, they go right up to the line every time. It's not hard to just go over it. You want to do about 99.5%, 101%, and suddenly you're getting smacked. And that is definitely a problem. But looks to me like the Apple crowd is more than willing to try to paint the tape up here till the end of the year, and that means it's going to be incredibly hard to get the NASDAQ to pull back. You need to have probably at least a couple of sectors in the NASDAQ pull back, maybe the IBB, some of these other ones. And are they pulling back a little? Yeah, but not enough. I don't see enough energy out here, and we're probably going to be into light volume by Tuesday of next week. So it's going to be very hard to get anything really pushed down next week. That's when I start thinking that we're going to see a lot of these short squeezes really start to develop going into Christmas. Anyway, hang on for Tom O'Brien. And remember to sell when you can, not when you have to. Catch me tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.